What's going on, guys? Market Michael here. It is May 10th. What's in focus for next week? We got Iran, oil, gold, silver, dollar, Bitcoin, indices, bonds, whatever, much more. Fed, Yellen, Grandma. Let's get started. First of all, I want to just explain to you what's going on in this little picture I got going on here. So, I drew in this doji. It's a very nice little yellow doji at this trendline channel, which we're most likely going to fail. We're going to go back down to the 7,200 support or 7,100 support. This is that area where it's going to make or break markets. If we continue to get support and move along the channel, this is just going to reinstate this little bullish phenomena that's going on here. Is that a long-term thing? I don't really know, because the markets can't. I don't think they're going to be able to pierce this longer-term resistance. I don't care what FANG does. The FANG isn't the markets. The amount of money they would have to just pump into the markets at this time would be absolutely ridiculous. And I just want to say, the Goldman says mom and pop are responsible for this meltdown in January, that we had that big crash. That's absolutely not true. Goldman, I don't know what the fuck you're fucking smoking over there. You must be just taking it up the ass from the deep state for this propaganda. The CIA is giving you dirty money, you fucking scumbags. You fucking caught. You're doing predatory loans again, you fucking assholes. Let's get on to markets. We got a lot to cover today. What we're looking at, we got a mix of things right here. So we're looking at the futures right now. Futures, we're coming down with that CCI. We're still positive, which makes me believe we're going to get a little pop in the morning, right? A little pop, and we're going to come back down with that doji. So that's what I'm really thinking. But I want to show you guys pretty much what the markets have been doing and what we're going to face in long term. These are all dailies, guys. Okay, all right. So I've shown every single one of you. I'll just do it again because we may have some new listeners. So this is that 2001 .com bubble. This is 2008, guys. This is a laughable joke. Look at this giant decline versus this decline. This was at the 38% crash to zero. This was 100% crash to zero. Guess what? We're at the fucking 161% fib. We got a long way to this fucking 0%. We got a long way with fucking 1,500, 2,000. You know what I'm saying? Literally. Even at 3,000. That's still 4,000 points down from where we are. I don't think this is sustainable at this level. This is what we're dealing with. And, you know, people don't understand the gravity of this situation and what, you know, we're dealing against. This is the entire market force. Like, this is double, almost double fucking 2001 on the market's shoulders. And you could see this at this chart here. Let's go to a 20-year daily, and you can see it. Look here. This is a 161% fib from that 2001. So we're up there. We can't break it. You know, I don't think we can. I think we're just going to go sideways for the next, I don't know, until midterms maybe. That's what people are saying, that they're going to keep this up until midterms. I don't know. I think that this escalating crisis in Syria versus Iran versus Israel, this could be a real big problem for markets. Let's get into what I'm expecting. I mean, I already told you guys what I'm expecting. We're getting that doji around 74.50. I expect this to back down, get some support, continue up in this channel until there's a giant trend change. Overall, look at that CCI. The CCI spiked out way too much. You know, we haven't really touched this underbought level. Markets are just trying to get on that positive level. Unfortunately, we're just going to go down again, go down below it, do a quick dip, We're probably going to get back above it, above that MACD line here. You know, go above it, go back down, and try and sustain some sort of trend above it. You know, again, guys, this does not look good. Here for the comp, it looks okay. I always fuck up the charts, guys. I'm sorry. Okay, for the comp, that's pretty nice. It looks like we're on some sort of move to break highs. You know, here we got a higher high. So this is what we're looking for. Is this higher highs? This is indicating this short-term trend change. Here for the Dow Jones, looks ugly as a bucktooth inbred cousin of yours. Lower high, lower high, lower high, lower high. I mean, come on. It's absolutely disgraceful. I don't think I think this is the elephant in the room. This is the big problem that a lot of people don't want to look at. Yeah, the comp looks great. Yeah, FANG's doing phenomenal. Yeah, earnings right now were great. Yeah, technically unemployment government statistics is very low, 3.9. You know, inflation isn't really seen as a humongous problem yet. So, you know, why am I so doomy and gloomy? Well, number one is it's this longer term cycle, this debt cycle, not debt cycle, but longer term market cycle. We're at the end. This is definitely the end of the bull cycle. Whether it's this year, whether it's next year, it's got to be this year. There's no way the markets can go above that 161%. I don't know how, you know, I don't know how they're going to keep pumping FANG up to that 161 and beyond, while the Dow Jones is struggling to get any traction. It's absolutely ridiculous. So, you know, with the CIA only lets things run how they want it to run. For instance, you can't go on television and say the truth. You can't. They won't let you on. And if you do say the truth, they'll cut you out. They'll cut your mic off, and that's it. You spoke too much truth, you're done. You know? And that's what we're looking at. So don't listen to these fools on the media saying everything's great. You know, we're at the stage where things, you know, are getting scary. Right now we're going to look at that 10-year, 2-year spread. Three days in a row at 0.46. That's kind of crazy. We're going to look at that 10-year. We're going to go ahead and look at the dollar. These are all instruments of debt. Again, you look here on a daily. This is clearly a decline off of this rally. You know, I said that we'd have resistance at this 92. I didn't think we were going to break it. We ended up popping above it. You know, I said it's possible to hit this 94, this 38%, but I didn't think we were going to go above it. And look here, we didn't even get close to that 38. Well, 38. Yeah, 38%. We didn't even get close. So we're coming back down. We are, you know, we had a breakout here. And they had to suppress the fucking living shit out of the 10-year to get it this way. And, you know, you could kind of see this weird, unnatural, like, 3-star behavior. We've seen 2 before, right? We've seen 2. We see 2. Here's 4. Real rough time at 4. So, I think this is potentially a heavy area where markets got to pass. We haven't got lower lows with that. We got to go down with that to invert. It's only a matter of time. That dollar is going to be a big factor into things when we look at gold here and when we look at silver. You can see here we definitely had this nice move up. We should continue this breakout, although silver is kind of, the CCI spiked up too much, so we could, I think we're still gonna go up, but I think we're not gonna be explosive tomorrow. It's probably gonna take some time for silver to kick ass, and gold. I think gold's gonna kick ass yet again, uh, but I don't think we're gonna pass this 38%. We're probably gonna stay in this 1320 range for a little bit longer. Let's look at Bitcoin because Bitcoin is another interesting power play, you want to call it. People made millions off this. So, I was a little ignorant and I was late to the party. I realized Bitcoin was fucking going to the moon at like fucking 10,000 and I'm like, "Oh shit." And then it just kept going and going and going. I was like, "What the fuck is going on?" So, you know what we're seeing? Look at that CCI dropping too low. That's still relative strength. I mean, we could find support possibly 8,000, a little higher, 9,000, get support, maybe even move higher. But let's look on a weekly. I'm not sure if that's really gonna. Yeah, on a weekly we crossed the MACD. So potentially, we need to find support. Once we do, we could move higher on a weekly. That's pretty interesting that Bitcoin might be set for a breakout at some point in time. Look at this, higher lows. That's pretty interesting. Let's see if this trend continues or we keep declining. Let's check out sweet crude because um everything that's going on with Iran, that supply shortage, we got a supply shortage today. Sorry guys. Okay. Again, oh, Jesus Christ, we got to go to a longer time frame. Okay, yeah, we are kind of peaked out here a little bit. We are having this is a divergence, guys. When we move up too quickly for the price action, the MACD doesn't cover it. So that doesn't necessarily mean that, we're going to go down. It could mean that this is just going to continue to strengthen. We don't really have too much resistance between here and 80 and 77. So if we get a foothold at 80, 77, it's pretty much fair game from that point on. So this 70 to 80 move is a big critical move. So we looked at markets, we looked at where they could go, we looked at possibilities, and I think the biggest trend or the biggest thing that we got to look out for, guys, is is like is like the markets getting support. We got to be like a hawk when it's coming down and looking for, are we getting those higher lows? If that's the case, we're going to stay in that trend. That's pretty bullish. And for that comp, we could be hitting new highs, but meanwhile, the Dow is the big lagger. So, that's definitely a big indication that, that it's time for a recession. We got the yield inversion, we got rates going higher, and that central bank tightening. I'm pretty sure they only sold like $120,000 worth of bonds over the last 6 months. I mean that's really nothing. It's dismal when they have trillions of dollars worth of bonds. So they're tightening, and they're not really killing the bond market with their tightening, but they are propping the bond market up as well through the back door, which they won't admit. As well as the Fed also tightening interest rates, guys. They're tightening interest rates and they're raising them. And that's going to put more pressure on banks to, with their ability to make those loans out, as well as the 10-year. The 10-year has more effect. So, we're hitting pretty much highs. We're seeing the fact that, there's not many single family homes that's being created. That's because no one can afford these rates. And we're seeing a lot of renting, and renting was a big thing in that crisis, that '08 crisis. No one could, after after the prices skyrocketed, and there's a big debacle, big credit crunch. No one, you know, everyone had a rent. We're already seeing that right now. We're also seeing year over year CPI, PPI increases, regardless of what they try and spin right now, whatever the case is. Over the past, fucking since forever, you look at a fucking Fred chart, it show you, the CPI, PPI, whatever you want to look at, it's been going up. So this inflationary pressure has been steadily rising. It's heavily increasing in food, energy, insurance, housing, autos, pretty much any debt as well. So, we got a lot to look out for. Housing prices are high because of the ability of banks being able to lend the money. And this is really just a ticking time bomb. I guess I don't want to say I got a little too excited when we had those big drops, because I really was a little excited. I thought that, there was no way it's coming back. But right now, the short-term pressure the market's got, I, it doesn't even make sense for the mom and pops to have control. Are you kidding me? When these financial institutions push out, I would say, billions or trillions worth of shares a day, they're not dictating the price action. Price action is dictated by the people who are serving the liquidity. So, and not only that, or they're using the algorithms, and not only that. So, like, the algorithms have algorithms that have algorithms. You know what I'm saying? So an algorithm is when Apple releases something or other, it buys. And then there's an algorithm that knows that when this algorithm's going to do something, it buys before that algorithm. And then before that algorithm buys, there's an algorithm that buys before that algorithm. So the fact that you want to blame mom and pop for this fucking crisis, that's not the case. It's algo trading is the problem. Well, it's not a problem, but it's just the reason for that rapid sell-off, because the central banks, admittedly, in 2013, said that they were shorting volatility. This is all fucking insane to a Keynesian. It's insane. It's ludicrous. It's fucking retarded. No offense. It's just, it hurts my heart to see this done to a country that was founded off of oppression from one of the greatest empires. We slayed the head of the beast, and out came another, which was us. We were okay. We did okay. The Constitution was set up right, but fucking the Keynesians took over. That idea of central bank took over. They started controlling the currency. 1913, Federal Reserve was created. All goes downhill from there. 1930s, Great Debate. Austrians lost because they couldn't promise something for nothing, guys. They couldn't promise something for nothing. That's not how real growth happens. And this is a big fucking disaster. It's a big disaster. I don't know how much longer, how many more cycles this is going to take for the U.S. economic engine to completely flatline. I mean, we already got the feeding tube in from the Fed, pumping in fucking liquidity. So how much longer? Even central bankers like Bernanke said we needed helicopter money. Fucking helicopter money? Are you fucking nuts? What kind of fucking assholes do we have? And if you ever look at a fucking hearing from Congress, they're all imbeciles. All of them. I don't think there's one fucking good congressman. It's a shame, because they're all fucking bought up by the lobbyists. And guess what? They promise something for nothing, and that's why they get reelected. That was one hell of a rant. We definitely covered everything I'd want to cover and more. This was a great episode. I guess I want to apologize for me kind of, for getting things wrong. It's not that I got it wrong. But what I believed what was going to happen was wrong. I always tell you guys the possibilities. I say, well, this could happen, but I think it's going to go this way, and fair enough, it went up, and not what I thought. But as a trader, it's all about possibilities, and we have to be aware of them. But right now, we're at the end. I'm going to do a nice recap for any of those who are still listening. We got this. We're gonna get a doji here, guys, or we're gonna get some sort of transition candle, maybe another morning star. Finish off the week. Finish off the week decent. Maybe still be have a very bright green MACD or something, and then Monday start to come back down to reality. All right, guys. Oh, let's just look at what's going on for tomorrow's economic calendar. Oh, sorry, I'm flip-flopping now. This is and more part. So that nat gas inventories, we got a surplus. Crude invents, we got a decrease. That was yesterday. So that's no wonder why the price is going up, and that's because of that whole Iran thing. So Treasury budget increases by fucking 34 billion. And check this out. We got import-export prices. We got oil and excluding agriculture. We also got Michigan sentiment. And we're expected to get a gain, but who knows what we'll get. So, again, we're just going to have to let things develop. With all that being said, guys, thank you so much for listening. Please like and subscribe, and I'll see you later.